Hello everyone, this is General Romulus coming to you live from the Forum in ancient Rome. Before we begin, remember all videos posted from Romulus are for educational purposes only, as we hope to help you discover consistent returns regardless of market direction. Okay, let's get into it. All right, now the S&P 500 along with the NASDAQ, which is a majority place where the tech stocks hang out, have basically gone straight up from these late March lows. You can see how the Dow Jones Industrial Average, the second oldest average of stocks in all of history, has not been following suit. And why is that? Well, the gains have been primarily, not exclusively, but primarily driven within the technology, big technology companies, and more specifically within the semiconductor group itself. So we're talking about companies like Intel, that's been a big driver. NVIDIA has been playing catch up, although not up as much recently because it went up so much 2 and 3 years ago. AMD is up a lot. Companies that are in the AI chip making and chip supplying business. The whole group has gone vertical, or as we say in the industry, we have now seen a parabolic upside move. And as this move has developed, it's quite possible, even probable, that many of you watching these videos have just started buying the chip stocks a few days ago, right up in here. And back in my Wall Street days, we would call that potentially top tick Harry. Not a term of endearment, not a term or description that you want to apply to yourself in the trading or investing world. It means that you could have been the one buying the final top day before some type of a change of direction from up to sideways or down could be coming right after you buy. One way we can get a better idea, no guarantees in this, these situations can just continue for a while, but one way to get a better idea is taking all of these candles, these red and green candles, which each one representing 1 day of trading, and change that from day over to week. So now every one of these candles, the red and green, is representing an entire week's worth of trading. So last week we saw an 11% upside move in the semiconductor group. I want to focus your attention to what you see on the bottom panel. Forget these top, the blue line and this yellow line here. The one on the very bottom panel, this is called an RSI, relative strength indicator, invented by an analyst and investor by the name of Wells Wilder in 1978. However, it is mislabeled, misnamed. It is not a relative strength indicator that you may be thinking of. Relative strength meaning how strong or weak is something relative to something else. And the Wells Wilder RSI is not that. It doesn't measure relative strength. It is instead measuring speed and momentum. Speed and momentum. And again, though, I have this changed to a weekly from a daily chart, and you can see that it is on the upside at a very, very extreme level. And what I've noticed is that when major indexes such as the S&P or the NASDAQ, even the Russell 2000, or the sectors, whether it's energy or technology or groups within the sectors, when they start to push north, when the RSI pushes north of 75, we start to get into an area where the odds are rising that what was happening prior, which was up, changes from up to sideways or down. And the reverse is true. When it starts to get below 30, again, on a weekly basis, that would come after a strong downward move. The odds start to rise that the downward push is going to stop and we're going to get a sideways or upside move coming in the near term. So again, that's when it gets over 75. Well, right now, it's almost at 85. And if you need further evidence of this, go ahead and take a look at what happened in gold a couple of months ago. 2025, the gold trade was on. That went parabolic. And check it out. Fourth quarter of 2025, the RSI indicator pushed north of 75. Then price went up a little more. And we saw this is a bearish divergence. Price goes higher. The indicator wasn't able to match the previous speed and momentum that it was experiencing a couple of months ago. And then what happened? Gold tops out at the end of January, hasn't seen that price since, and actually took about a 25% downward hit, and it's still consolidating through all of that right now. And actually, gold looks like from this late January high, that could be a high that could be in place for not just several weeks, as we've already seen, and a few months, but possibly even several years. That's why knowing where these RSI indicators are in relation to price, especially after a strong, consistent, same directional move for some time, is so critically important. Further evidence, we have right after the U.S.-Iran war started, oil prices start to spike. Remember, only a few months ago, at the end of 2025, oil was trading in the 50s. In the 50s, and then it doubled, more than doubles, up to almost 120 in the first week of the war, only to see prices fall quite a bit. Well, what happened to the RSI? Check this out. Here it was at 87. This is war we're talking about. This is when everybody was thinking oil was going to be at $150 and $200 a barrel within a couple of months. A lot of pressure comes in, and this is where the top tick Harrys got really caught up and kind of smashed, because over coming weeks, oil then fell 35% from those highs. So here we have the semiconductor group within the technology sector, which is within the S&P 500. You see how we play it sort of like a Russian nesting doll situation. But the semiconductors, this is where everybody's been lately. And the top tick Harrys, and we hope that's not you, they started buying right about in here, only a couple of in the last couple of trading days. Now you can see this RSI pushing. It's up here almost at 85. You saw some recent evidence. Of course, there's piles of evidence that go back decades and decades demonstrating very similar behavior. Look, nothing goes in a straight line forever. When I see this kind of trading behavior, what tells me is that we're going to see a change from up to either sideways or down. Okay, what do you do about this? Well, if you just bought last week, you're gambling. So just get out. Now, if you've had chip stocks for a while, here's an opportunity to lock in some gains. Maybe sell a little bit, lower your average cost, playing with some house money, put a stop loss in place so that if they start to fall a bit, because they could tumble a lot, if they start to fall a bit, you sell some or all of your position before a much larger correction starts to kick in. You could buy some puts. If you own, for example, if you own a stock like Intel, which has gone quite a bit higher over the last several weeks, you can buy some puts in Intel or buy some puts in the semiconductor group and protect yourself over the somewhat intermediate, short to intermediate term as we see the coming correction unfold. With semiconductors, and when I've seen this type of behavior, so oil's going up, you think it's going to $150 or $200 a barrel, you want in. When it gets extremely overbought, all you have to do is wait. Typically, it's a little bit longer of a wait period than this. Gold looks more typical of that. All you have to do is wait. You get your entry opportunity, and that is most likely what we're going to see over the next 3 to 4 months within the semiconductor group, regardless of what goes on today, tomorrow, next week, because overbought and stretched could become more overbought and even more stretched. However, an opportunity to enter, if that is something you want to do, most likely will be coming over the next 3 to 4 months. And if you don't get the opportunity, if they just keep going higher, well, like I said, nothing goes in a straight line forever. And this, I promise you, despite how it feels that these stocks are going to go up forever, it will not play out like that. I mean, Intel's gone up back in 2025. See the stock trading in the 30s, and here it hit $130 a share on Friday. And is it going to be going up forever? Again, the stories within this space, they're very compelling. NVIDIA, which has not been going up at the rate it was in 2023 and 24 when it was on that absolute tear. This is the company that designs the most advanced artificial intelligence chips in the world. Then they contract with Taiwan Semiconductor and possibly Samsung, I'm not sure, but possibly Samsung as well, to go ahead and make those chips. And they sell them to the data center build-out companies all over the world. There are only 3 chip manufacturing companies, at least as of right now, that are capable of manufacturing the high-end chips that are really purchased in bulk from these companies. Taiwan Semiconductor is one of them. Intel is another, and Samsung is the third. That's it. They're the only 3 that are capable of manufacturing these types of chips at very large scale levels on a global basis. And the reason the story is compelling is because it makes sense. If this is one of the only companies out there, and in the last couple of weeks, Meta and Google and Microsoft and Amazon and a few others have announced hundreds of billions of dollars that they're going to spend just this calendar year, just in 2026, on building out more data centers. And therefore, these companies are going to need more of these advanced chips from NVIDIA and from AMD and from others. And those companies are asking TSM, Taiwan Semiconductor, to manufacture the chips. And now Intel is starting to get some of that action as well. But the story of oil going to $250 a barrel or $200 a barrel was compelling also. And then up until the beginning of this year, gold and silver, more silver than gold, because silver was involved in this AI trade. Silver is used in a lot of the manufacturing processes and as different components for the data centers. I mean, it made all the sense in the world. And silver is still being bought and put into these chips and these data centers all over the world. However, it's quite probable that silver has put a multi-year high over here. No matter how compelling the story was, things get priced in and they get overdone. Nothing goes in a straight line forever. Okay, do General Romulus a favor as I bring ancient Roman trading secrets to you. Please, if you haven't already done so, subscribe to the channel so that I may continue to bring you these ancient Roman trading secrets. I very much appreciate it. So go ahead and hit subscribe. All right, so that's the summary here, is that the semiconductor group within the technology sector is simply overdone. It has gone in a straight line. Nothing goes in a straight line forever. General Romulus is not calling for a massive correction in the semis, pulling them back 30, 40, 50% or some large, unbearable kind of situation, especially if you bought recently and you could be in the top tick carry situation. However, after a move like this, when things are stretched like this, it is quite probable that a change of direction is coming from up to either sideways or down. And as we're looking at this, even on a daily basis, because we moved it back, you could see a little bit of a bearish divergence. This is the RSI on a daily basis. It went to 84 a few weeks ago. Price went higher, and the RSI went to 83, and then price went higher, and here it is just under 81. So we've got a couple of points where price has gone higher, but the RSI, again, speed and momentum indicator, is starting to flash bearish divergences. Now you combine that with the massive, historically, probably record high overbought nature in the chip stocks, and we have a recipe for something, a change of direction. Now I'd like you to take a quick look before we wrap up for the day at a chart that this is courtesy of one of the centurions in the Romulus Legion, demonstrating Intel stock. Now it's hard to see on the bottom panel over here. This is dating back to 1986 when Intel, or 86, 87, when Intel was first trading over here. So this is before the dot-com era and all kinds of different stuff that went on. But even during the dot-com era, Intel was not as overbought on the metrics, some of the metrics that we use, as it is today. As a matter of fact, it's at an overbought level that is historical. Has never been this overbought before. Think about that for a second. And think about this as you get that FOMO, you want to chase after these stocks, you want to get in there, everybody's making money but you, and forget all that. Put that aside, get it out of your mind, wipe it clean, you're going to be fine. And if you want to learn more about this in detail, you can always contact me directly, romulusteaches@yahoo.com, where you and I can discuss how to help you achieve consistent returns regardless of market direction. And that building behind me is that's the Coliseum, and we have some gladiator games going on. They're starting in a bit. I'm back to ancient Rome. Cannot wait for the games. To all you traders out there, have a great rest of your day.